Good evening. Today is April 26th. Victor is on vacation today, and it seems that the market took a day off also. We had a really narrow range in the S&P 500 for most of the day, only 10 points. And it closed up around 10 points. As Victor would say that it's not enough money for the infrastructure to make, so probably a big move coming. At least that's what I think he would say, but he's not here. We will see tomorrow. Meanwhile, Bitcoin had a really nice update today from low of 47 to as high as 54.4. It's around 15% run up. And luckily, we have Andy Aiken joining us today again, and we could ask him if he knows why, what was the background for that large move today in crypto and Bitcoin in particular. Can you add any color to that?
On which well, Bitcoin, item?
Bitcoin had a 15%.
Oh well, what we had, what happened is there was a 11-day down move in Bitcoin from when it made a new high back on. It looks like the new high was on 14th of April, and then it spent the next 11 days moving down. There was one up day during that time, and so it reversed really nicely today, and it's up currently in the last 24 hours, so a little bit over 7%, and it was up as much as 10% on the day earlier today. But I think what actually caused it to pull back a little bit toward the end of the day was the news about Tesla. They sort of missed their earnings, and I don't think. I mean, Tesla is not. It's sort of like the putting the cart before the horse. I mean, Tesla, even though it's a big cap company, it's still a smaller capitalization than Bitcoin, and definitely much smaller than the rest of the market. So, or the rest of the crypto market, but it's tied in people's minds to some degree. So I think that might have hit it a little bit, and just the fact that it rose so much on the day. But I think it was I would say that it's a reversal from what we've seen from that strong down move. It was a 27% move down from its new all-time high. I think it was a pretty severe pullback that actually compares with pullbacks that you really have to go back to 2018, 2019 to see pullback of that depth, and so that's it's a pretty strong pullback. So I think that it may have worked off some of the maybe the froth in the market, and we've definitely seen some of the smaller issues, like say maybe there's still some fraud in some of these, like a Dogecoin, which is kind of more driven by memes and Twitter posts and things like that than it is actual network value or long-term potential. But it's but we've seen maybe some of the froth knocked off the market. And whether this 10%, 7%, these are big moves. Probably this is not sustainable. It might pull back for, let's say, a kind of a secondary low over the next few days. I would expect that we haven't seen the end of this somewhat bearish or cycle or correction, but I think it'll then start to rally, maybe from a slightly higher low from what we saw over the last few days.
Right. You have mentioned Tesla, which has reported earnings after hours, and even though it reported beat earnings, I guess people are disappointed, maybe because most of those earnings actually came from regulatory credits, as usual. 520 million are regulatory credit, up from 400 something last year. And on top of this, I think they sold some of the Bitcoins that they held and made 100 million on. So if you add that up, it basically ended up with most of the profits, even more than that, came from regular credits and Bitcoin sales. So people are a little disappointed.
Right, and but most of their profits though came, although they beat, most of their profits came from like non. Um, it wasn't from sales of vehicles and things like this. It was from some of these financial items that were that accrued to the bottom line, and so that's that sort of thing. These aren't sustainable. They're one time issues. Like selling off Bitcoin is a one time issue. Now, it maybe spooked the market a little bit only because Elon Musk had said that he's going to hold all of his Bitcoin and not sell any, and then they ended up selling a little just because they need the cash or whatever.
Well, they need
And
numbers, but
what's that?
they wanted to make the numbers. They wanted the certainty.
Right. Yeah, they had to make their numbers and they had to recognize some profit. That's right. Yeah, that's right. So
Right.
they, so I think, so now we're seeing, so about 1.6% off after hours down to
Right.
726.
Right.
So,
Right. Also today, again, the corn, wheat, soybeans are all again making new time highs. So commodities are at the highest level since what, 2011 or so, depending on which one you look. And I guess maybe it will be hitting the grocery store shelf pricing soon enough for that, for food items. So we'll see what Powell would do about it.
yeah, it's been, yeah, the, soybeans and corn have been rallying very strongly, and it continued that today, and of course copper as well. And then the other thing that we saw today was the dollar really made a negative move. It looked like it might have bottomed, and then made a strongly negative move, about 0.5%, which is pretty big for a dollar index move. And so that that I think was one of the drivers of these commodities moving up. But still, it's whether that continues or not. That's I think a question. The dollar's been trending down since pretty much March of last year. Just been a nearly constant downtrend with a few counter rallies. But
Right.
if that continues, then we'll continue to see the commodities moving up, I think.
Do you think the dollar move actually affect Bitcoin much, or do people follow the dollar? And
Definitely, and I think that was part of it was a component of the move today that we saw on Bitcoin. I wouldn't say it was all of it. Some of it was just I think it was partly relief rally today, partly dollar move, and then also just yeah, I would say those were the two. I wouldn't call it purely a relief rally. It was the move down from the high, 27% move down, was pretty strong. So it's I think that the fundamentals are still positive for Bitcoin longer term, and it also did it made, although it was the first time that it made a lower low, at least since, well, let's see, since this year, or at least since January, is the first time that it made a lower low, and so that is what spooked some people, some traders, especially the futures traders. There were a lot of people that had positions that were liquidated over the last several days. There was something a few days ago. There was something like $10 billion in liquidations on some of the big exchanges where people are very levered up on futures, and so that was what caused some of the big down moves that we saw in Bitcoin over the last several days. But I think maybe the move down has exhausted itself a bit, and what we might see another day or so of a move up, depending on what happens with Tesla tomorrow, and then we might see it start to ease off a little bit before then it can rally again. And maybe the same with the dollar. We might see a counter move tomorrow after a big move today, and then it might resume its downtrend. At least that's what the trend is pointing to. But
And to change the topic slightly, I'm not sure if you've seen that. It seems that the vaccination pace has slowed down in US, and the average daily cases are dropping below 60,000. At the same time, some states are even refusing the shipments of the vaccine because I guess there is no demand for vaccine as much as it used to be. And it's interesting how would that affect the COVID and the market, because people are no longer interested. If people are no longer interested in getting vaccinated, are we ever going to reach the target that Fauci wants for us to finally open up, or are they just going to give up or force vaccination? Because it seems that fewer and fewer people are interested. And in Florida, for example, you can just walk in now in many places and get a vaccine. You don't even need to register. It's pretty easy in many places.
Right, and in some of the places where there's the vaccination rate is lowest are the cities like New York where the COVID deaths and so on have been the worst. So it's like are the vaccinations occurring where they could have the most impact or not? That's that's a question. Another thing I think is maybe an underplayed story in the U.S. is there's been a big resurgence in India of COVID, and that you may think, well, that's India. They've got a whole set of economic differences from the United States. They have in a lot of the cities are large populations of poor people that live effectively in slums. That it's very poor, and so that they can be kind of a breeding ground, but still this resurgence. So last year, while the United States was experiencing this big spike of cases, they really didn't have a spike. It was pretty much muted compared to what happened in Europe and the United States. And now they're having a huge spike that's much bigger than last year.
No, I've read on Twitter a very interesting theory, just to interrupt quickly, about why India may be spreading COVID so much now is because now it's planting season in India, and they're fertilizing the fields. And you know what they're fertilizing the fields with? Aerosol human feces. And
oh boy,
that's one of the ways COVID actually spreads. Same thing has been reported in China in those housing where they have poor ventilation between their bathrooms. And that's one of the ways COVID spreads. And so, I mean, I don't know true or not, but it's an interesting theory because India, like you said, had very low rates, and all of a sudden now it's a spike. So people are proposing because they are, like you said, very densely populated, and they feel that perhaps too close to the people where they're living, and they're not as sanitary as in US. So perhaps that's one of the reasons.
Right, and it's now heading into planting season, but kind of their monsoon season. So people are, at least in a lot of parts of India, they're more confined in their houses. They're staying in, and there's less ability to be outside and so on. So so that exacerbates it too. But some of these, like what I've heard is some of the business process outsourcing organizations, they have something like a 50% medical absence rate. And these tend to be younger people, working age and so on, that are out because of either family members or they are infected. So I don't know the degree to which there might be spillover effects for markets or for the U.S. economy, but it's a wild card, I think. So.
Right. What do you think is the biggest or the most important thing you learned from Victor?
Well, I think I've learned a ton from Victor. I think that the thing that I really that I really learned is how to first structure the trades and then let them work out, and then you're either right or wrong about the trades. And so he when I worked with him, he has a very elaborate system for analyzing historical cases that are similar to what is happening today across markets. So it's a cross market analysis and understanding correlations and relationships between markets. And then, but then, based on this, you have a kind of probability of certain trades working, and um, and so you have high probability, lower risk trades that can work in your favor, and they could be bi-directional. Now, Victor would say, markets have incredible, or especially stock markets, equity markets have a very strong drift up. But if you look across other markets, it could be more bi-directional. And so that's true with equity markets, but let's say in a crude oil market or bonds or some of the commodities, it could be more bi-directional. So um, if you've got the right data sets, really high quality data, and then got the analytical engine, you can make high probability trades on a regular basis. And I think the same thing extends to crypto markets, that um, that a lot of crypto traders tend to see um, a kind of crypto as its own world and not have relationships to other markets like equity markets or bond markets or dollar, things like this. They tend to be kind of contained within their own world. So I think there's a big opportunity to look across markets and apply those learnings to crypto market as well, and to say, well, when bonds do this, and the DAX does this, and U.S. equity markets doing this, what's the probability of a long on Bitcoin for today working out well, being profitable? And so I think that approach is a very powerful approach, and I think just that way of thinking very logically and analytically about and quant method of trading, I think it works better than relying on, let's say, technical analysis or some of these other things that have less reliability. Doesn't mean that you ignore those things, but you based actual trades and position sizes on quantitative analysis, statistical analysis, and that has, I think, it's testable. Unlike the technical analysis, you could say, well, it wasn't really a head and shoulders, or it wasn't really this triangle formation, and it's sort of debatable and subjective, whereas the quantitative analysis can be made objective, and you can test it, and you can say, this didn't work, so we'll stop doing that. We'll do something else. We'll try a different approach or different trading style. So that's what I had the math background and the stats background, but it was really how to put it all together with a good trading philosophy. It's in Victor put a lot of those in his books, but just working with them, I learned a lot about how to do that too.
Cool. What do you think is the biggest misconception about Bitcoin? That's like
about what? I'm sorry.
Bitcoin. What's the misconception about Bitcoin? One of the rumors that are floating around that everybody believes that are not true.
Oh, I see. Well, okay. So maybe the biggest that I hear sometimes is that it's, and this is maybe a little bit of an older one, is that it's this sort of tool for illicit activities, for people to make illicit transactions, like Silk Road, where supposedly there were people buying like hitmen and things like that, or illegal drugs, or child pornography, or all these things, and they could buy it and pay in Bitcoin or other cryptocurrency because supposedly it couldn't be traced. But in fact, the person that was running Silk Road was very much traceable, was arrested and had his Bitcoin seized, and so on, Ross Ulbricht. And it may be there are people that even hold him up as a kind of maybe martyr or kind of cause célèbre that this is someone who was unjustly prosecuted for just running a platform. But that aside, I think the thing about Bitcoin is it's actually unlike, say, dollars cash, $100 bills or something. It's very much traceable, and you may not. It may be pseudonymous, but you can tie, in many cases, tie those transactions back to a person based on what types of transactions they're making and so on. So it's not. And also, if you look at where the criminal activity is really occurring, what it's occurring with, it's $100 bills, it's €500 notes. These are a much bigger source of illicit transactions, and maybe 2% of all illicit transactions are occurring with something like Bitcoin. So that's one. I think another one is the idea that that there's nothing backing it up. Okay, that's what you often hear, especially in traditional finance discussions. Is there's nothing behind it. It's just air. It's just a made up currency, and I think that is it's misunderstanding what really generates Bitcoin. That is it's the computation, and then the fact that it's cryptographically secured means that it can't be replicated. So you can counterfeit a dollar. It might be very, very hard because of all the protections that they embed in that dollar. And they put the security strips, all these things that make it very hard to duplicate it exactly. And they've also made it so that it's very easy for someone to check whether that dollar is fraudulent or not, whether it's counterfeit or not. With Bitcoin, it's even harder to counterfeit, and it's even easier to check. There's an absolute instant check that this is not a real Bitcoin or it is a real Bitcoin, and it's much, much harder. The barrier of counterfeiting is much harder. So it's to some degree, I'd say the dollar, what's really backing it is the faith that that dollar will buy the goods in the future. There isn't gold backing it up or silver backing it up as there was at one time. And so it's based on faith and the value of the secure stability of the government and the military, and these things supposedly back it up, but it comes down to faith. And I'd say it's the value of the network and what you're buying, what a Bitcoin is. Or any other cryptocurrency is. You could think of it as a voucher that allows you to participate in that financial network. And so what that means is the more users and the more activity that you got on that network, the more valuable it is. So you can create a new cryptocurrency. I could create one tonight, but if I'm the only one using it, and maybe 3 of my friends or something, and I use it, it has very little value because it's not widely accepted. And so the fact that there are millions of people that use Bitcoin or some of the other leading cryptocurrencies, that's what gives it its value. And so I think, but I think that what I'm saying that these objections, they're slowly going away over time, and because there's this idea that people like Nassim Taleb and others have written about over the years. He wasn't the first, but he maybe popularized it. Is the Lindy effect, which is the longer something stays around, the less likely it is to go away. So if and there's even been research on things like on that like there was famous research on, say, authors, that there was a very famous Benoit Mandelbrot, who was the mathematician who invented the word fractal and did a lot of research on it. He very famously, in a paper, made the case that authors die at the exact point that where they produced half of their work, the work that's in their head, and that they die not having done the other half of their work. And And he, did a lot of math to show why this is true. And so this is sort of the other side of the Lindy effect, that sort of the more prolific an author, also the more work that never got published that they had in their head. And so it relates to this. The longer that Bitcoin stays around, the more their credibility that it has. That it's not just tulip mania or South Sea bubble.
Right.
And
it's
it's
kind of like
and I think that
it's kind of like
what's that?
It's kind of like Yahoo. Yahoo was around. It was the best search engine. And then Google came around, and now Yahoo is non-existent practically. So
before Yahoo, there was Alta Vista and, some of these others, that just totally supplanted. And, MySpace was supplanted by Facebook. So there could be something like that I don't want to say it can't happen. It certainly could. But I would say, though, that one of the things that's really common in the cryptocurrency world is what is called maximalism. This idea that, like, Bitcoin is going to be the only one that survives, or Ethereum is the only one that survives. And some of the people that hold these ideas, they're the ones that they've been around the longest. They've got a lot of credibility, and they write books, and they're very smart people, some of them. And I don't want to say they're wrong, but I do think that that kind of tribalism sometimes is it makes you don't see investment opportunities because you've got a preconceived idea of what works and what doesn't work. And I think that you have to be a successful investor, you have to be a little bit more agile in your thinking and just open to, well, this might be changing, and being able to kind of know that the wind's changing a little bit. But I think that my view is that unless something really drastic happens, Bitcoin will continue to dominate and be the biggest. And then I see Ethereum as not really competing for that top spot with Bitcoin, unlike some Ethereum, like, very strong enthusiasts would say, well, it'll take over everything. I don't think so. I think it will own a big chunk of a space that's the smart contract space, and decentralized finance platform and other applications will get built on Ethereum, and it'll own a big chunk of that. But there will be competitors that might steal other niches, and so that's just but again, it's subject to if something changes in the market, and Ethereum, for example, doesn't meet it's got a schedule of, like, new improvements that are supposed to happen over the next several months in July, and then next year. If these things don't happen, then it might throw that into question, and it might not happen. So it would hurt the value. But I think it pays just to be open-minded. Have a clear conviction, but not be stuck on that conviction, and not be unwilling to change. But I think that's a very common thing within the crypto world, to be sort of, this is the way it has to be. And I that it's sort of like a MySpace investor being, well, MySpace is, why wouldn't they continue to dominate, or Alta Vista or Yahoo? And you get left in the dust. So
yeah. What about?
I think it's
sorry. One of the other main complaints, so to speak, that I hear about Bitcoin in particular, and other crypto, of course, is that the usage is not really increasing rapidly. It's not as widespread usage as it could have been, given that it's been around. Bitcoin has been around for what, 12 years? I don't even know. Right.
Well, it's been around 11 years now. Yeah.
Okay. And so why the usage is not going up as dramatically as the prices? The prices gone up thousands of %, and the usage gone up not really even 10 or 20% in the last couple of years at least.
Yeah, well, that's it. Okay, and there are people that say that if you go back to the original Bitcoin white paper, which was a Satoshi Nakamoto pseudonymous white paper that was published along with, as Bitcoin was founded, that it was, the title of that is, a peer-to-peer payment system, effectively, and that it was envisioned as, the very first transaction on Bitcoin was there were people that sent one another Bitcoin, but it was mainly either mining or it was like a gift. Like the Satoshi Nakamoto gave away thousands of Bitcoin in the early days when he was trying to get people to use it. But the first transaction was famously someone spent 10,000 Bitcoin to buy 2 pizzas. Today that would be worth, $540 million. But back then there was no real marketable value. It was there might have been exchanges, but it was maybe trading for, I don't know, 3 cents or something like that. So nothing. And so this might have been like $30, and the pizza store owner chose to accept it as a kind of just to make this transaction happen. And but so it started as with, I think, a lot of people thinking that this is going to be a payment system that parallels the regular financial system, SWIFT or whatever. And the problem was that the block size, so that's a limit on the number of transactions that can happen, and the time between blocks, in other words, how fast is Bitcoin issued, that there's limits on these things. And there was resistance within the Bitcoin community to change these parameters. And that's resulted in Bitcoin turning into a kind of what the positioning is as digital gold. That when you buy gold, you don't go out and use it to buy coffee or whatever. You put it on a safe and you store it away. And the rising value, it being a strongly deflationary currency, means people don't want to spend it. And maybe if it started dropping significantly, then people would unload. But even then, I think there's in crypto there's a long-term holding mentality, hodl mentality, and so there would be a significant number of users that would see that as an opportunity to buy, which is what we've seen. Even though a little over a year ago, it was dropped to 4,000, but it rebounded very strongly from that point. So I think that's a long-term issue for Bitcoin. So there have been so there were several years ago, there were Bitcoin forks, like Bitcoin Cash, Bitcoin Gold, these different ones that spun off. That hasn't occurred in a long, this 3-4 years ago that was happening. And the idea behind those was that, Bitcoin has gone away from its original mission or idea as a peer-to-peer payment platform, and that's what we want to be. We'll be the true vision of Bitcoin, but they haven't really taken off. They might have had a few weeks where they were rallying strongly, but then pulled way back and have never even come close again to Bitcoin value. So it's like the potential competition doesn't really exist, and there are some that I would say might have let's say a niche kind of potential as a payment currency, and there are even people. All of the central banks, China, United States, etc., Europe, are all looking at central bank digital currencies, and so they want to issue like crypto version of the dollar, their own crypto version of the dollar. And so maybe that kind of goes away from the original idea of crypto, which is that it's trustless, that you don't have a bank backing it up. It's based on this network that's independent of banks.
Right.
So I don't know if crypto people, the culture would ever adopt those and would stick with Bitcoin in my view. So I don't see it as a threat. But anyway, I think the point is that because of the number of holders and number of users is much higher than it's ever been. So the active wallets has continued to go up with Bitcoin,
but they're just
but the
trading.
number of transactions.
Right.
What's that?
I'm saying the number of holders go up, but they're just trading with themselves. They're not buying stuff using it. So to me, Bitcoin seems more like digital gold, where it's just stored in digital vaults, and then its destiny, if it's going to continue like this, will be like destiny of gold, where it appreciates periodically, occasionally has some bubble run-ups, and occasionally just appreciates normally. Unless it's being used like actual US dollars and things are actually priced in Bitcoin, it's kind of hard to see it's used on a daily basis. Plus, with the vast majority of the population not really being digitally savvy, so to speak, it's hard to get even that sorted out. Like, when I have...
Well, what I think is going...
No,
what I think is going to happen, though... what I see is happening over the next, let's say, year or two, is that there are going to be one of the things that's really limited the adoption of Bitcoin or other crypto as a let's say a payment system is the fact that people would need to have a wallet to send to, that it's entirely driven by wallet to wallet transactions, and but most people, when they make a transaction, they're doing it with a credit card or debit card. It's much larger than cash today, and so if there were a crypto backed debit card or credit card. Now, this definitely goes away from the idea of trustless currency and so on, but I think that that there are people that if they let's say if you want to be able to use it, let's put it this way: there are companies like Coinbase and Gemini and Kraken, some of these other exchanges that are all on the verge of issuing a credit card or let's say a debit card that would let someone use the crypto that's on that exchange as payment, and they could pay with their Bitcoin, pay with that they're holding on that exchange. But it's not trustless anymore. It's on an exchange, and you're paying with a credit card, which means that it's clearing through all of the traditional finance systems and so on. So it's not the true spirit of crypto, but I do think that people will find that a certain segment will find that attractive, especially a lot of the newer users, because they're less, let's say, they're more motivated by the savings and speculative appreciation potential of crypto, and holding some of their savings in it, rather than seeing it as, well, I want to separate myself from the traditional financial system, and I want to find an alternative to the traditional financial.
That's exactly what I was gonna say. That why, like, I don't see a problem with trusted system. Why do I need to have this trustless system without banks? I'm very fine using the credit cards that are backed by the bank, and if there's fraud, the bank pays for it, the bank takes care of it. Like, what's the advantage of using trustless system in general? I get the appreciation.
Well,
obviously you want to buy crypto, and that's why I think people are mostly buying it and holding it, because they see this appreciation potential. And right, I get that for that. You buy it, you hold, and hope it becomes a million one day, and we all will be trillionaires. But why would I ever want to use crypto, period? If the dollar is going down and my income is in dollars, I want to spend the dollars and put the excess in crypto and just store the crypto forever, as long as it appreciates.
Right. Well, well, okay. So going back to that original Bitcoin white paper, it was January 2009 that this was issued, and at the very heading of that was a quote from I think it was the Economist magazine, or as they call themselves, newspaper, and it was about the banks bailout and how the UK government and the US government were getting ready to do another wave of bailouts for the banks to keep them from becoming insolvent. And so it was born in the midst of the financial crisis, where here these banks, they are able to profit because of a set of laws that were changed that made it easier for them to securitize these loans and package them and sell them without insurance, or without really having them be insured and properly backed and so on, as they were claiming. And when this all goes bad, then they get propped up, and Goldman Sachs still pays bonuses to all its employees in 2009 and so on. And so it's like, well, why should, maybe we need to find a system that doesn't work this way, where it's not backed by debt, and it's backed by value rather than by debt. So I would say the first people that were really involved in this, and people like that we do know the names of, like Hal Finney and so on, they were very staunch anarcho-capitalists, so Austrian school libertarians, and so if you go by the work of like Mises and Hayek and so on, Hayek actually wrote a number of papers in the 70s about a trustless currency, and how a non-state currency might be able to emerge. And he didn't imagine blockchain or any of these things. That was an innovation that came later, but it was really based on some of the work that was done by Hayek, and then John Forbes Nash, the mathematician who came up with like Nash equilibrium and so on. He had done some work on that as well. And there have even been maybe some people, I don't know if it has credibility, or people that suggested that he was Satoshi Nakamoto with some of these other things, because he died in 2010. He and his wife died in a car accident on a New Jersey Turnpike in 2010, which was about the time that Satoshi Nakamoto stopped posting on different internet forums. And so there have been people that have suspected that, here this Nobel Prize or field medal winning mathematician, and very, he actually did win the Nobel Prize in economics, not math, but that he was Satoshi Nakamoto. But anyway, so there were a number of figures that they saw it as a problem of so maybe a way that I would put it, where there's some trust issues, is with some of these, like what we've seen lately is, say, Twitter or Facebook. They've shut down certain topics of discussion or certain people, and where, like, when what you often hear in discourse is when people complain about, well, I got suspended on Twitter for this or that, or saying this about masks or COVID or something like that. And well, just start your own. What's the problem? Start your own Twitter. Okay, well,
they banned
the people that started their own Twitter, yeah, they get shut down by their payment system. They get shut down, and so WikiLeaks, the same thing happened to them. The only thing that kept WikiLeaks going for several years was that they accepted payment in Bitcoin and some other cryptocurrencies. So and Gab and some of these others have accepted payment not in with a credit card. So I think it's the trustlessness. One aspect of that is that transactions can't be censored, that there's no censorability. It's completely, any transaction can occur. And that's, I think, what the real objection is on the part of people when they say, well, it could be used for illicit activity. What that might mean is it could be used for activity I don't like. That right. If I were running the financial system, I would disallow that to you to pay that person, even though they've done nothing illegal. It's just they allow things on their forum or their platform that I don't like, and we shouldn't allow that. It hurts people or something. And so that's I think the power and why I actually don't think the government right now in the U.S. and really in Europe that they really see, or even in China, that they see cryptocurrency as like a threat. It's as long as it's not being posed as, well, this is going to replace the dollar, then I actually think that it's like there's a mixed set of feelings in the financial regulatory apparatus about this. They see it as maybe a source of innovation and jobs, and perhaps, that it could be,
or perhaps a source of income for themselves that they don't have to necessarily reveal. It's very convenient for them as well.
Right. Well, I know that going back to when my first transactions where I did sales of, say, Bitcoin or other cryptocurrency were back in, let's say, 2014, and from that time, that tax year, I paid taxes on my transactions. It wasn't clear how to really file that, but I tried to do it the right way, and over the years, and I think a lot of people maybe didn't do that. Let's put it out. But the more it is legitimized, and the more that, say, Coinbase becomes more like a regular stockbroker or something, the more they're going to be compliant and report, and you just pay taxes on cryptocurrency transactions the same way that you would any other financial transaction. And so it could be a huge source of tax revenue if it's fully legitimized. So why would you not want that? It could be billions and billions of dollars in tax revenue. It is billions, and with not hundreds of billions potentially over the years. So there's more. I think there's more value in like slowly integrating it into financial system than trying to ban it or stop it.
Right.
Like Turkey just did, where they've banned any kind of buying or selling payment in cryptocurrency. And I think that the reason for that is their currency is right now on the precipice, and it's about to collapse. Like I think it was about 14, 15 years ago that they had a big earthquake, and the lira collapsed over time because it was a very severe damage across the country, and it was already shaky. But then that earthquake really pushed it over the edge, and they haven't had an earthquake, but they're kind of on the verge of their currency collapsing again. And I think they see it as a way to kind of plug the hole in the dike and keep the money from flowing out of their economy.
Yep. Anyway, Andy, thank you so much. You've illustrated lots of interesting points about Bitcoin, and I'm sure Victor is going to have more questions tomorrow. And for the rest of the week,
sure,
it's going to be Andy and Victor providing all this interesting stuff, and I will be on vacation. So thank you again, and have a great day. Bye.
Well, thank you. Have a good evening, everyone.